Over the next 14 minutes, I'm going to give you more information than you've ever heard about Nvidia and give you the opportunity over the next 5 years to make more money off of Nvidia than you have in the preceding 2 years. That's because Nvidia is in the midst of a major change of what it does as a business and what it will do in the future. And it's going to have ramifications that are going to go across the industry. And you need to know about it if you want to make any money in the future, because this is the leader of the semiconductor industry saying, I'm taking charge, I'm going to run this show, and I'm going to run it my way. You watch this, and at the end, you determine what you need to do next.
All right, so let's get into this deep dive.
Yeah.
You're looking at Nvidia stock and wondering, can it keep up its incredible run in 2025?
Well, yeah, it was a phenomenal year for them in 2024. But can they maintain that momentum?
Right. That's the big question.
Right.
We've got some articles here from Seeking Alpha and the Financial Times. Analysts are weighing in on everything from their new Blackwell chips.
Oh, yeah, and a competition from Broadcom.
To their move into robotics.
Yeah.
We're going to break down earnings per share, that PE ratio.
Whether those gains can continue.
Exactly. We want to give you the full picture.
It's fascinating to look back at 2024 for Nvidia. I mean, it was a year for the record books.
Really?
Their revenue almost doubled to $113 billion. Gross profit went through the roof, $86 billion.
Wow.
Operating income jumped almost 100% to $71 billion.
Okay.
And their operating margin
It's impressive.
hit an amazing 63%. Their stock returned about 183%.
So they crushed the S&P 500.
Leaving it in the dust, you're looking at record-breaking numbers across the board.
I wonder everyone's asking if this can continue.
Yeah.
But I am seeing some cautionary notes in these reports.
Yeah.
Analysts are predicting a slowdown in revenue growth for 2025.
Oh, really?
Maybe to 40–60%.
Still impressive.
It is impressive.
But compared to 2024's almost 100% jump,
Right.
it makes you think.
It does. And when we talk about earnings per share being key to stock price growth, a slowdown in earnings growth could mean a slowdown in how much the stock price goes up.
You've hit a crucial point.
Have I?
Yeah. The easy days might be over.
Okay.
The amount they're beating earnings estimates by is getting smaller.
So they're not exceeding expectations by as much.
Exactly. This suggests that growth, while still strong, is moderating. You're right to focus on earnings per share. Companies that consistently grow their earnings tend to see their stock prices go up over time.
Okay, but they have this new Blackwell architecture.
Right.
That's supposed to be a game changer for AI applications, especially with demand exploding.
Blackwell is key here. It's designed to handle those complex AI tasks. And the demand is already huge. Reports say it's sold out for the next 12 months, projected revenue in the billions.
We're talking $30,000 to $40,000 per GPU.
Per GPU.
With some super chips costing $70,000 each.
I can see why they're expecting big revenue. And let's not forget those fully equipped server racks.
Those can cost over $3 million.
Yeah, we're talking serious technology, but there are whispers of possible production delays. And even overheating issues.
That's not good.
If they can't fix those and meet demand, their growth could be impacted.
That makes sense. But wouldn't relying on just a few big companies for all that Blackwell revenue also make them vulnerable? If those companies decide to build their own chips down the line.
That's a valid concern. There is a risk they could become too reliant on a few large customers.
So it's not just about the tech itself.
No.
It's about who else is out there.
Yeah.
And I see Broadcom's name a lot in these reports. They seem to be taking a different approach.
What Broadcom's doing is partnering with those hyperscalers.
The big guys.
Companies like Meta, Microsoft, Google, to develop custom ASICs.
No, those are chips specifically designed for a particular task, right?
Right. As opposed to NVIDIA's more general purpose GPUs.
So it's kind of a David and Goliath situation.
Interesting way to put it.
Broadcom coming in with these specialized weapons against NVIDIA's powerhouse GPUs.
I like the analogy. And Broadcom's not alone. Marvell is making moves in this custom ASIC market too, providing specialized chips for specific tasks.
So the question becomes, can NVIDIA's more general GPUs compete in this world of specialized chips?
That's the key question, and it's one that investors are watching closely.
And then you've got AMD still out there, even though their latest benchmarks haven't been amazing.
Right. And don't forget those hyperscalers themselves.
What do you mean?
Google and Amazon, they're developing their own chips in-house for AI.
Really?
This in-house development could really shake up the market, putting even more pressure on NVIDIA.
So with all these challenges, what's NVIDIA doing to stay ahead of the game?
They're not sitting still. They're making strategic moves to diversify their business and counter these threats.
Can you give me the details? What are they doing?
One thing they're doing is expanding beyond the cloud, focusing on selling directly to enterprises, partnering with companies like Dell and HP.
To give those businesses on-premise solutions.
Right. For businesses that may not be ready to move everything to the cloud.
Interesting. So they're going after that on-premise market. But what about this whole custom chip thing? Are they just ignoring it?
Not at all. They're actually embracing open source AI, optimizing their technology to run those models efficiently.
So regardless of the source, they want to be the best platform.
Precisely.
Smart move. If you can't beat them, join them, right?
Yep.
But I'm also seeing robotics. What's Nvidia doing, getting into robots?
This is where it gets really interesting. They're betting big on robotics as a future growth driver.
Calling it physical AI.
Exactly. It's a bold move,
Well,
but it could have a huge payoff if they're successful.
so they're not just making chips for robots. They're building the whole system.
They're developing a full stack solution,
That includes software simulation and hardware.
leveraging their AI expertise and applying it to the physical world.
Wow. It's amazing to think about all the potential applications,
Yeah.
but it also makes you wonder about the unintended consequences.
It's definitely a major undertaking, but they have a history of ambitious goals and achieving them. As for unintended consequences, there are always risks with new technology, but they're aware of them and working to address them proactively.
Okay, but how does robotics fit into their overall strategy? It seems like a big shift from their core business.
It is a departure, but a calculated one. Remember, they're facing more competition in their core GPU business.
Right.
Robotics could be a way to diversify and create a whole new market for their AI expertise.
So hedging their bets, exploring new frontiers.
You could say that.
Makes you wonder if they're spreading themselves too thin. Can they really succeed in all these areas?
That's the big question. Only time will tell.
Okay, let's talk valuation. With all these moving parts, the slowdown in the competition, this robotics venture, what does it mean for their stock price?
Well, despite the challenges, their stock is still trading at a premium. Their forward PE ratio is around 35, which is down from its peak. It's still high.
Oh.
Their EV to sales ratio is also elevated, around 30.
So not exactly a bargain. But some analysts are saying buy, while others are saying hold off.
Right. It seems there's no easy answer when it comes to Nvidia.
No easy answer. There are a lot of factors.
Yeah.
And it depends on your risk tolerance and investment goals.
Exactly. Their future is bright, but it's not guaranteed.
Okay, so for someone trying to understand all this, what's the key takeaway?
I think the key takeaway is that Nvidia is in transition. They're going from being dominant in one market, GPUs, to trying to lead in multiple markets. They have a track record, but they face a whole new set of challenges.
They're at a crossroads.
You could say that the decisions they make in the next few years will determine their long-term success.
This has been incredibly helpful. Thank you for breaking it all down.
You're welcome. It's been a pleasure.
Okay, so we've covered a lot, but before we wrap up, I want to go back to their financials for a second. You mentioned their forward PE ratio is around 35. Can you explain what that means and why it matters?
Sure. The price-to-earnings ratio, or PE ratio, compares a company's stock price to its earnings per share.
Okay.
A high PE ratio suggests that investors are optimistic about the company's future growth.
So they're willing to pay a premium.
Right. In Nvidia's case, a PE of 35 suggests investors believe they have strong growth potential.
Even with the predicted slowdown in 2025.
That's right. But it's important to remember PE ratios can vary widely between industries and even between companies in the same industry.
So there's no magic number.
No magic number that says buy or sell. It's just one piece of the puzzle.
So how should investors interpret Nvidia's PE ratio in light of everything else we've discussed?
They need to consider it along with other factors.
Right.
The company's growth prospects, their competitive landscape, their management team,
Their financial health?
and their overall strategy.
So it's about the big picture.
Exactly. Valuation is more art than science. It requires judgment and careful analysis.
You mentioned their EV to sales ratio is also high at around 30. What does that tell us?
The EV to sales ratio compares a company's enterprise value to its revenue. It's another way to assess if they're overvalued or undervalued.
Okay.
A high EV to sales ratio can indicate that investors expect significant revenue growth in the future.
So for Nvidia, that could be a sign that investors are optimistic about their ability to keep growing revenue.
Despite the challenges.
Yeah.
That's a reasonable interpretation.
Okay, so we've got the PE ratio, the ED to sales ratio, and all these other factors.
Yeah.
It's a lot to digest. What's the bottom line for investors deciding whether to buy Nvidia stock?
There's no easy answer. Nvidia is high growth, high risk.
Okay.
It has the potential for significant returns, but it also carries a lot of risk. Investors need to weigh the potential rewards against the potential risks.
And if they invest.
They need to be ready for a wild ride.
Because.
Nvidia's stock price has been very volatile,
Yeah.
and that's likely to continue.
Fasten your seatbelts.
Good advice.
All right, so we've talked valuation. and what investors need to consider. But I want to come back to this idea of them becoming a platform company. What are the challenges and opportunities there?
That's a great question. The transition from product-focused to platform-focused is major. It comes with both challenges and opportunities.
Let's start with the challenges.
Yeah.
What are some of the biggest hurdles?
One is building the ecosystem to succeed as a platform company. They need to attract developers, partners, customers to their platform. Create a thriving ecosystem that fosters innovation and collaboration.
So they need to convince others to buy into their vision.
Exactly. And that's not always easy. Another challenge is managing the complexity. So platforms are complex systems.
Right.
Nvidia needs to manage that effectively, integrate different technologies, manage stakeholders, respond to market changes quickly.
So it's not just the tech, it's managing the whole ecosystem.
That's right.
And it's a big challenge.
What about the opportunities? What are the potential benefits if they can make this transition? The benefits are significant. As a platform company, they can generate revenue from multiple sources.
Like
hardware sales, software licenses, services.
Okay.
They can leverage the platform to create new products and services.
That wouldn't be possible with a product-focused approach.
Exactly. They can expand their revenue streams and create new growth opportunities.
Yeah.
Create a more sustainable business model, less vulnerable to competition.
So if they pull it off,
This transition could be a game changer.
it could. Any final thoughts for our listeners trying to make sense of NVIDIA and its future?
Well, Nvidia is a company at a crossroads. They're facing big challenges,
Right.
but they also have huge opportunities. The decisions they make in the next few years will be key.
To determine if they can stay on top.
Exactly.
So a company with potential, but also risk.
You got it. That's what makes them so interesting to watch.
Well, thanks for joining me. I think we've covered a lot today and given our listeners a good overview of NVIDIA and what lies ahead.
My pleasure.
And to you listening, thanks for joining us on the Deep Dive. We'll see you next time with another stack of sources and a new topic to explore. Until then, keep learning, keep questioning, and keep investing in your knowledge.
So there you have it. Do you know more about NVIDIA, its current price, its future, what to expect over the next 2 to 5 years? I think you do. I would ask you, do you have that kind of information on every stock that you own? How do you get that kind of information? Well, you do what I did. You read the articles, you find the earnings statements, you look at the numbers, you come to understand their income statement and their earnings statement and their balance sheet. And if you do, you'll find that NVIDIA is once again growing its employee force. It's once again pumping more into research and development. Why? Because it recognizes another growth opportunity, robotics and changing its platform. It's not going to just be an architect of GPUs. It's going to be an architect of robots. It's going to be a deliverer of AI agents with its relationships with Dell and HP. It's going to give more products and services and more revenue streams. You're going to see more and more of this, of people, of large companies that control a large audience, a large TAM, putting themselves in a position to generate more revenue from more streams to make themselves a more substantial and sustainable company. That's what I do on my projection sheet. That's what I do for every one of my stocks. When there's current information that gives me better knowledge to make better investment decisions, I do a deep dive. So you can do what I'm doing for 60 companies, or you can come to Best of Us Investors and access these deep dives over the next 14 days. It's free to you, and decide, is this what you need going forward from this point forward to make good investment decisions so that you can become wealthy? It's going to cost you, though, $19.95 a month. How can I give it to you that cheap? Because it's more, we're spreading the cost amongst the tribe. This is how countries, this is how tribes, this is how businesses grow. When people pool their knowledge and their resources for the betterment of the tribe. Get on the bus.